Yo guys, FX, welcome back to another video. Yeah, it's been a minute, but today we're gonna be pretty much focusing on a simple New York profile, right? Because recently boy's been pretty much providing London, because that's the one I trade, but all this is universal. So in this case right now, right, I'm gonna be showing you how to pretty much implement, or how I would pretty much implement the same concept the same terminologies and the same everything to execute a trade. And generally, New York distributions are pretty much the easiest to capture when we compare them based to London. You understand? So, yeah, most people will most likely reside within this one, right? So, first thing we need to do when we are trading within New York, right? We need to identify our London range. So, we can say this whole entire range in here, right, is our London range, right? And what we have is buy side above, right? So we'll just say high, buy side, right? Then we can copy this below and then say this is the low, sell side liquidity, right? And then right here would be having our quarter ranges like this, and we only trading pretty much Q3, right? Okay, so for us to go long, right, on a base level with no additional bias and stuff, right, we seek price to pretty much sweep or create an accumulation range to New York, right? And this accumulation range is always fixed from 6 a.m. to 7:30 a.m., right? So we can outline this as 06 a.m., right, to 07:30. This is our dealing range. This is our Q1 accumulation range. So we need to see some form of a range. We need to see some form of an accumulation range that forms within that range, right? And then from 7:30 all the way to 9, right, we seek manipulation. What do we mean by that? We need price to go low. If we're bullish, right, we require price to pretty much go below the first accumulation range and also target lower sweeping sell side, right? Which in this case would look something like this. And then Q3, our dealing range, right, would be from 09 to 10:30. Sorry, boy just got a little flu in it. But yeah, which should look something, the dog's outside, which would pretty much look like something like this, right? So if we're to look at this pattern wise, right, what you're looking for is you identify the high and low of the London session range. The London range, right, is pretty much an accumulation range in this case, which would be a range from midnight all the way to 6 a.m. So this whole entire dealing range, right, would begin from midnight to 06, right? That would say center. That's our London accumulation range. So we identify the highs and lows. And in simple terms, if we're looking to take longs, our drawn liquidity would be the high, right? So if we were to look at this from a pattern range, it would be something like this, then like that, right? Price opens, accumulates, and then heading into our second quarter range, it rolls lower, right? Sweeping pretty much the first quarter range low, right? And then it seeks to sweep London's sell side, right? And then we get some form of displacement and then potential drop back into a favorably gap, and then we execute our trades based on that, right? So like right now, I'm going to be showing you a couple of few examples of these concepts and how you want to approach them. Okay, right now we've currently identified the London range, right? This is our London range. Our New York opens at 6 a.m., right? And it ends at noon, 12 o'clock. This is our dealing range, right? Then we can utilize the Gantt box. This is optional. But personally, I'm just using my indicator to identify the ranges, Yeah, it just pops up on its own. But yeah. First thing we require right now is price to create some form of an accumulation. So let's see how that forms. Okay, then the accumulation, right? Our first quarter accumulation manages to sweep London sell side, right? So like now, what's our drawn liquidity? What's our drawn liquidity? It would be potentially London buy side. So right now we've got a idea in the back of our head for the first possibility. Yeah, in fact. So right now, heading into Q2, which is all the way from 7:30, right, all the way to 9 a.m., we require price to seek lower prices, meaning that the first accumulation range should be swept, right? We'll call this Q1 sell side liquidity, right? And now here's the beauty of it. Our New York opening price begins at 7 a.m. and our highest probability trades is when price is below this range right here, right? We can project this out like this, and then let's just make this smaller, like that, right? That's our opening range, and we need price to go below the New York open. Let's see. Okay, price has drawn lower, right? The only area or the only zone that will be looking to take our trade is all the way from 9 a.m. to 10:30 New York time, right? So we'll call this our kill zone, right? Which is from 09 to 10:30. And by the way, guys, this never changes. It's always fixed like this. You'll always be looking to take trades within this range. So like right now, what we're looking for, right, is some form of displacement, right? Displacement is when price violates an order block, right? Shifts in market structure, then potentially draws back into a fair value gap, right? So like right now, let's just see. Okay. First thing I'm able to identify within this range, right, is this candle right here. This bullish candle. That's regarded as our breaker. That's regarded as our breaker right there. So, as soon as price closes above, you generally want to execute your trade like this, right? As soon as the next price opens, with your stop loss pretty much at the low, but the risk to reward ratio in this case wouldn't make much sense, right? So you'd want to refine this. And how do we do that? We wait for price to draw back into a fair value gap, right? And then we refine from there. So we'd have this as a 5-min BZ / fair value gap. Then we can place this at the bottom like that. Okay, now we're going to run back everything. Price has swept London sell side, right? And then price has gone lower than the first quarter sell side, right? Meaning that Q2 has swept Q1's low, right? We've got displacement, right? So like right now, we expect price to drop back into the fair value gap. We can even remove this just to keep the chart clean, right? So now let's see. Price draws lower, right? But now here's what you do. You want to scale down to a lower time frame, specifically the 1 minute time frame, because if you pay attention, we are still within our manipulation range, right? So what we're looking for, right, is price to reach our third quarter range, and then that's where we'll be looking to see price react higher, right? So meaning that if price was to react within this range and then just continue going higher, then this would be regarded as a missed opportunity, right? or sorry, or a trade that we don't pretty much take, right? So let's just see. Price draws lower, even sweeps. Okay, let's see. Okay, right now it's 9 a.m. New York time, right? This right here could be a potential order block. It's currently, I regard this as an order block, right? But we just want to see price close below it. Let's see. Price does that. Okay, so as soon as price closes above like this, right, that becomes a newly breaker. But in this case, it hasn't just of yet. So let's see. So wait for the next candle to form. Okay, the next candle closes above the range, right? In this case, we've tapped into the 5-minute fair value gap, right? Let's go back to the 5-minute fair value gap, and price is trying to react higher, right? We go back into the 1 minute. Within this range right here, that would be our entry. As soon as the next candle that forms would be our buy trade, and then with our stop loss just below the swing low, right? Internal range liquidity low, right? And our first target would be, let's go back to the 5-minute time frame, would be the accumulation high. Let's just see. Our first drawn liquidity, right? If I was to remove this, let's just do it like this. Would regard this range right here. Draw on liquidity, right? Then we can remove the indicator, right? So our first drawn liquidity within this right here would be a Q1 high, right? Simple as that, right? Then if you want to refine it, you would utilize a standard deviation from the low to the breaker range, right? And then project it higher. So let's just refine that and then reverse it, right? So any standard deviation above price would be potentially this one right here. Then that's the one you'd want to utilize, right? So if you want to target a higher area, the most logical one would be our London range buy side, right? And the next standard deviation above it, right? But this one's usually are the hardest to sustain, especially like for new students or new traders, because price fluctuations can be really heavy on your psychology, right? But yeah, let's just see how price books from this range. The next candle opens, so that would be pretty much a value buy with your stop loss below price and your target being buy side right here, right? Simple trade. Does not have to be perfect within this case, but let's just see. Price. Okay. Let's see. Price starts hovering. See? Let's see. Let's even monitor this on the 5-minute time frame just to keep things clean and down on psychology. So if you were targeting the accumulation range high, right, you would have been out the trade with your profits. But if you were still targeting the upper standard deviation of London, you'd be still floating, right, but managing your trade based on how price behaves, right? So now let's just see. Price draws lower. It taps buy side, but it fails to pretty much reach the next standard deviation, right? Psychologically. So it's either you'd be holding through this drawdown or you would have pretty much lost the trade or whatnot. Hopefully this part makes sense, right? So like right now, we're going to be going into another example. Okay, guys, here's our second example. right? And notice I'm using crude oil features, right? And personally, I only trade Nasdaq and Forex. So this is just me displaying that this is pretty much universal to every asset class, right? And by the way, if you want these indicators, got like 3 versions right now, just updated. You can hit me up on Twitter, and then I'll exclusively provide it to you. But yeah, so the rules are right now, price has swept the buy side, right? For us to go short, we would require this high to be swept, right? For us to go long, would require London low to be swept first. Whichever one gets hit first, right? That's the one we're going with. Let's see. Today open, price is swept, the accumulation low. So if it sweeps this high, we'd be waiting for displacement to seek higher prices. Let's even add in our quarterly divisions, right? So this is our dealing range, right? And then Q3 is our kill zone, right? Okay, perfect. Okay, now let's see how price books. Price draws lower, right? Right now, we'd want to see displacement. Price closes above, below. So this right here could be a potential shift in market structure, right? Let's see. Firstly, price has swept the London low and the first quarter low. So price is within a discount range, right? So like right now, if price closes above right here, would be looking to seek higher prices. Let's see. Price goes up, goes lower, wicks above, wicks. So like right now, we can update it to be this high right here. So if it closes above that high, that's our displacement. Let's see. Okay. Price draws back into the range. I moved it a bit too fast. So in simple terms, when price was within this range right here, right there, when the next candlestick opens, right, that would be pretty much our entry. I would wait for a potential fair value gap to form with our stop loss just below price. So it will be pretty much something like this. And then our drawn liquidity would be the accumulation high. So let's see. Price almost takes us out, then keeps going our direction, right? Which is the accumulation high, right? So hopefully, guys, you found this video insightful, right? Hopefully, I've simplified this model for you. And if you need assistance, you can hit me up on Twitter, and then I can further explain everything to you, maybe on a one-on-one session. But yeah, hopefully everybody stays safe.